Hi, welcome everyone to Coleman Report Live, September 15th edition. We have a very special show with you. We have two important guests. Elizabeth Williams is the Vice President from Summer Corps. Hi, Elizabeth. Welcome to the show. And John Winnick, a recurring guest. Welcome back, John. Appreciate both of you being here. Tell us what's going on in 504 lending, Elizabeth. How has your year been? Has it been record growth, just like everyone else? And just give us a little preview. I think you're first time on the show, so
Yes.
Introduce yourself. And
thank you for having me, and it is my first time on the show. Yes, as everyone knows, I think that it has been a record-breaking year for the SBA. We've reached the funding cap of $7.5 billion, which is really a wonderful thing for the 504 program. Everybody has been working hard to help small businesses, and we expect to see that continued momentum. Clearly, there has been a lot of things that have impacted the growth, including the fee waivers and enhancements that were provided, the monthly payments by the SBA, and then in times of uncertainty, we all know that banks tend to look to the SBA for additional support. So it's been a great year all the way around.
great, you were telling me earlier you've been around 504 for many years, and have you ever seen anything like this before in the terms of volume and demand?
There's been nothing like it.
Okay.
And it's really exciting, and to see what has been great after all that we've been through in the last couple of years, to see businesses that are continuing to grow and thrive and look for additional resources so that they can purchase real estate and continue to grow their businesses after what we've all been through. It's really a positive that has come through all of this.
Wonderful. We're going to get into that in a little bit, but first of all, we have a poll question from John's band report. I'll check that out and we'll sign you guys up. It's a great weekly report, right, John? He is going through bank provisions. So bank provisions are higher now than pre-pandemic levels. True or false? How'd they do, John?
True is the answer, but they certainly come down a lot from where they were third quarter last year, and that's been a big driver of bank earnings since then.
Let's see. Small to mid-sized loan growth performed better than large institutions. Again, true or false?
I mean, say small to mid-sized banks.
Banks, sorry. Yeah. I should have clarified that. Small to mid-sized bank loan growth performed better than large institutions. Very smart crowd.
I got a very confident and a very smart group, talented group of lenders.
Yeah, we'll go into the numbers later, but tell us, I mean, is it astronomical, or is it a new phenomenon with all the new enhancements? Why are small to mid-sized banks growing a little bit faster than the big boys?
Well, I think overall loan growth hasn't been great, but I think that, intuitively it does seem like smaller and mid-sized banks are closer to their customers, and they may have moved to loosen underwriting standards faster than maybe the larger banks have. It's a modest divergence. I mean, overall, the loan growth has been tough, and I think the challenge with the small and medium-sized banks is so much of the loan growth the past year was PPP, and obviously a lot of PPP will have paid off at the end of the year. I think Lance suggested 80% of all PPP dollars will be retired by the end of the year. So, the challenge with small and mid-sized banks is they have the tailwind, the headwind of PPP runoff.
Yeah, and we covered that yesterday. I believe that the number is 66% of the total portfolio has been forgiven and paid off by dollar amount. So this last one is Delaney did a great article on from the NFIB tracking small business owners, the mood of the country, and we wanted to ask small business owners to expect better business conditions within the next 6 months. And it's split down the middle. I think it just depends on your marketplace and your customers. Some people are very enthusiastic, and some people are not. I think the number was down quite a bit. Actually, it's down 28%. So it's just, I think it's just uncertainty is the word of the month, John. I think we were all excited to go to America East in mid-August, and that's changed just from a month out. So.
Yeah, we had a conference we had sponsored yesterday, and I think half the registered attendants didn't come. I mean, I guess
switched to virtual.
The silver lining was, 100+ people did come.
Yeah. All right. Elizabeth, take this away. We talked about 7(a) fees yesterday, but this is what you put together. So give us an update on the 504 fees and the new information notice.
Sure. So the SBA did just announce, as you covered yesterday, and the decrease in fees for the fiscal year 22, the fees that will be effective October 1st. There's a decrease in the annual servicing fee, which is a result of CDCs managing their portfolios and reducing the risk. And I think, as I've worked in this industry for many years, the program continues to evolve and improve. And so with this, they are able to reduce these fees, which gets passed on to our borrowers as a result.
These are some great charts that we got from NADCO. Thank you to the association. And it's just we've been talking about this the last 2 weeks, but once you see it with the increase of units and dollar amounts, I mean, it's just astounding, the numbers that were put together. And as you see, 7.8 billion, but the total capital invested is up to close to 20 billion. So they talk quite a bit about the fact that how busy 504 lending has been. Give us an update on this.
Probably is the low rates. Liz, what's the most recent debenture rate?
About 2.97.
Yeah.
So still below 3, which is very attractive for our clients. In terms of the authorization cap, we still have money out there for the refi without expansion. For people who don't know that those are two separate pools of money, one for the 504 loan program and one for the 504 refinance without expansion. So we do, as of this slide, which I think was a couple weeks ago, there was about 6.9 billion still available this fiscal year for the refi program, which is good news because it's on the uptick.
Is that because banks just aren't promoting there's an education issue with getting bankers to know about the benefits of refining through 504?
I think when they first rolled the refi program out as a pilot about 10 years ago, when we went through the other economic downturn, it was a pilot, and it was really a mess for those of us who started out in it, and it improved when they brought it back. And they continue to improve it. And then the new rules that were rolled out July 29th continue to make enhancements to the program that really make it easier for lenders and borrowers. And especially, I think, Joe, you have another slide. I don't want to get ahead of myself on this.
Oh, no, this is your point. The increased percentage in units is 405%. I mean, that's what you're talking about. So sorry to interrupt. Go ahead.
No, and I would say that the refi program, being able to refinance the 7(a) and the 504 loan is where we're really seeing right now the real increase in people coming back. Loans that were done a few years ago with the 504 where the rate was higher, or 7(a) loans where they don't have a fixed rate, and the 504 allows them to lock into a 25-year below market rate, is really a great opportunity. So.
Would you anticipate the refi being what X percentage of 504 loans? Do you think when
Historically, it has been a very small part. In order to qualify, there were different issues that we would run up against. And I think the one thing that you always have to look at is going back to that original use of proceeds, the original note, what was it used for? And so that's something that we always ask for upfront so that we can clear that. But the SBA has made some of these other hurdles a little bit easier to get over for our clients. And I do think, it still probably would be, I don't know, tough to say, 20% of our volume maybe. But historically, it's been quite a bit less than that.
Yeah, and these are the changes. Shoot me an email and I can send you the whole PowerPoint. It was a really good presentation by Natco and Linda Riley. They've been talking about this quite a bit at the regional events. I'm sure Flagel will cover it next week. But anyways, let's switch gears to your band report, John, the FDIC quarterly banking report, the second quarter. Tell us the big pictures view, and we love your insights. So go ahead.
Yeah, I mean, I think first off, as you sort of look at bank earnings over the past year, so much has been driven by the provisions. When banks were adding to their provisions, they were making a lot less money, and now that they're releasing them, they're making a lot more. These are, of course, non-cash events. But in the second quarter, the banks increased their profits by $52 billion, but $73 billion was releasing provisions. And so banks, since the fourth quarter last year, have been looking at their COVID-induced higher provisions and releasing reserves, which is going right to the bottom line. If you go to the next slide, the reserves are still healthy. I mean, there's still higher reserve levels today than there were pre-COVID. So in theory, there is room for banks to continue to release reserves, but they've certainly used a lot of that already. The bank provisioning is still higher than pre-pandemic levels. So while we do believe that the shadow workout universe is quite large, actual coverage of reserves to loans is still pretty high, 1.8% versus where it was at the end of 2019. The other thing, if you go to the next slide, I believe that's in there. Yeah, so this is why banks really need loan growth, right? Net interest margins are literally the worst they've ever been, and they'll stay bad, I think, for a while. 2.5%. It was down another 9 or so basis points. It does seem like this can't get any worse. Bank margins have to improve, but if you're a bank, why do you want loan growth now? Well, for one reason, any loan that you make at prevailing market rates, be it 3-4%, is going to be a better yield than your securities portfolio. So that's why there's so much pressure on banks to put loans on right now, because net interest margins are particularly low. Having said that, the banks have done a good job with cutting non-interest expense and finding areas of non-interest income. Some of that's capital markets, loan sales of residential mortgages, and so on. But it's been a hard time to be a CFO of a bank the last year or so. You've got tough loan growth, shrinking margins, so you really have to be tough on the cost-cutting side, and also find some non-interest income to make your numbers.
And hire contractors to deal with PPP and all sorts of.
Yeah, I mean, what's funny is, I had clients that were really insistent that the borrowers, set up new accounts for the PPP funds to make sure they, documented things properly. Because one banker told me, we don't want to get stuck with these loans. And now, because rates have been so low and you could borrow from the Fed, bankers haven't been too aggressive in pushing these PPP loans off.
Yeah. I think you have one more. Yep.
Yeah, and so, loan growth, we kind of touched on the question. I mean, the four largest banks we always analyze first. They represent about half of all the deposits. And, for the most part, I think three of the four largest banks showed negative loan growth in the second quarter. So if the overall industry is showing positive loan growth, well, then, of course, the smaller and mid-sized banks are doing a better job at loan growth than the largest banks. It's, and you're seeing that the Fed does this loan officer survey, and it does appear that a lot of businesses are obtaining new credit lines. Now, they're not necessarily spending the new debt yet, but they're certainly preparing to do that. So I do think loan growth will be much better the next couple of quarters. I mean, after all, if you have an economy, growing at a high single-digit rate, there must be loan growth. And with PPP done with, and I know the SBA did increase the attractiveness of the EIDL program, but for the most part, borrowers have gotten their free money, their stimulus money from these various programs, and so they're more likely to go to their banks for new credit.
Would you say that the credit boxes are going to remain pretty open going into fiscal year 22?
Yeah, I mean, I think I've seen loosening. The banks that I see that are really putting on loans right now are definitely lowering their standards in order to do such. So, I think it'd be difficult right now to be raising your underwriting standards. So, you're seeing more doing the opposite.
Elizabeth, do you agree with the activity you've seen?
Yeah, and I definitely have seen a big increase in the small to mid-sized banks that are doing the lending, and they've taken advantage of the program. Maybe it is due in part because they were doing the PPP and realized what a great asset the SBA can be to their clients. But I would say probably 30 to 40% of my loan portfolio is to small to mid-sized lenders right now.
Excellent. We have the last story is Delaney's. This came out this morning. Thank you, Delaney. It's an NFIB report on optimism, slightly increased in August. However, the takeaway on this is the uncertainty that 20% decrease in business conditions for the next 6 months. It's tough to plot that out. And however, small business owners have become very really figured out a lot of new problems this last year. And I think just like the Great Recession, they had to be very creative and finding their way through and navigating through all these different issues. However, uncertainty is still pretty high. So we will, I think, cover this again, Delaney, and it's NFIB. Sign up for their stuff. Sign up for John's stuff. More importantly, the band report. Excellent stuff. And contact Elizabeth with any 504 questions. So I think that's it for today. We have a webinar coming up. You can email me. It's in the next 30 minutes, but I can sign you up real quick on Lance is going to be talking about PPP loans and SBA loans past due 31 days. So if you would like to sign up for that, again, just shoot me an email. And thank you very much, Elizabeth. I hope you could come back. And John, welcome. We'll see you next month. So this is it for Coleman Report Live today, and come back tomorrow at 1 o'clock Eastern. Thank you.
Thank you.